Upstart is up 721% year to date, but the stock is now dropping 25% over the last 24 hours. Is this a buy the dip opportunity for Upstart? We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys had a great day out there. Time to talk about Upstart, ticker symbol UPST. Like I mentioned, stock's up huge. I mean, this thing is on a massive run. We've got a $25 billion market cap on this one, an insane PE, but we'll talk about, are the growth rates, are the profits good enough to pay up for this stock? On today's show, we'll go through the Q3 numbers. We'll take a look at the Q4 guidance as well. Take a look at all the revenues, the profits, everything that we normally do here on the channel. And we gotta talk about this from a technical perspective. This stock was up here at over $300 and some odd dollars just today. Just a few weeks ago, this stock was up over $400 per share. And now here we are sitting $250 per share on this one. From a technical level, what are we seeing with Upstart? We'll talk about that. Now, also on today's show, we are going to get into this, but what I want to talk about is I got recommended to look at this stock. And look, nobody knows every single stock and has looked into every single stock out there in the stock market. Maybe there's a handful of people, but I guarantee you not many of them are posting videos for free on YouTube. I'm going to walk you through my exact system by saying, hey, what is Upstart? What did they do? How do I research this company? How do I understand what's going on at this company? And how do I make a decision on whether or not this is a good investment? And just really quickly, I'm going to prove to you that this system absolutely works. Here's my IRA account. You can even see the last four digits of my account number here. So you know that's pretty real. Okay, so my IRA account is up 126. This is over the last 3 years. We're up 126%. Now look, I know it's a bull market, but the NASDAQ composite is up 115%. The S&P 500 is up 70%, and the Dow Jones average is up 40%. Not putting this here to brag. I'm putting here to show you that the system I'm about to show you absolutely works. So the first thing I do is I pull up the most recent press release. I love analyzing new stocks when they release earnings. And Upstart released their Q3 revenues. It came in at $228 million. The consensus estimate was about $215 million. They also gave us guidance on Q4, expecting revenue to come in between $255 and $265 million. Previous guidance, or kind of the consensus estimates, was much closer to about $228 million. So they are beating and raising across the board at Upstart. I can kind of start to see why this stock's up like 700% over the last year. Second thing I do is I go to just the company website. I see what's right above the fold. Okay, a fold on a website down here is below the fold, but right what loads at the top, this is what the company wants you to click on. This is where they want you to go. They want you to pay off credit card, consolidate debt, refinance my car, or do something else. So this is what this company does. It reminds me a little bit like SoFi and maybe some other companies out there. The next thing I do is I go to the most recent earnings call, which happened today. Now, you can come to seekingalpha.com. I'm not affiliated with them. I have posted some articles here in the past. They have paid some money for those articles, but I don't care what site you use. There's lots of sites out there that are doing earnings call transcripts. In this case, I like to read through the call, but you can also listen to it. Now, the other place to get this information is go to Upstart's investor relation page. The easiest way to find a company's investor relations page is simply type the company's name in Google and the letters IR after that for investor relations. It will take you to their page almost 100% of the time, with some exceptions. Now, what you can do also here is listen to the conference call if you want to listen to it on the company page. If Seeking Alpha doesn't give this information away for free, or they make you click through too many ads, we'll just come to the company's website and you'll be able to find this call, usually not in transcript form, but usually you can listen to it or watch it, however they decide to do it. You can also find the most updated financials as well, and that's what we bring up. But before we did that, I like to look at some investor slides. I like to look what they put towards the top of these slides. Most of what they put are the financials, which we'll talk about here in a second. But what I thought was interesting are these fully automated loans. This reminds me a lot of SoFi, which is a company we looked into maybe a few months ago. And so reminds me of them, that they are trying to automate and take kind of the human element and make these loans fully automated with instant approval. This is absolutely going to make your customers fall in love with you. When you want a loan, you want it automated and instantly approved. Those two things sound absolutely fantastic to me if I'm applying for some kind of loan. Now, in terms of the financials, we come to the most recent financials. I tend to focus on the most recent quarter, but we will reference the right-hand column where we've got a 9 months ended. Since this was Q3, we're essentially 3 quarters into the year. We basically get a view of that as well. Now we've got these 3 months ended here. Hello, revenue growth. You went from 72 million. Make sure you always know when you're used to looking at the Apples and the Amazons, this would be $62 billion because these numbers would be in millions. You'd be adding 6 zeros. In this case, we're only adding 3 zeros. That makes this $62 million. This is $210 million. That's absolutely fantastic growth. Forgive me if I mix in the word billions. I've been looking at a lot of mega cap companies recently, but $210 million. We've got some other interest income as well. It's not insignificant. Look, $18 million worth of interest income. That's fantastic. So you get this total revenue growing in the most recent quarter to that $228 million, which is the number that we referenced here on the press release. So $228 million, up from $65 million in the previous period. Obviously explosive growth. That will explain to a certain degree a price to earnings multiple that is just completely in absolutely astronomical outer space. And it also will explain the fact that you got a market cap on this one at 25 billion. Yeah, with a B. Now we're talking billions when we're talking market cap. And then I see for the 9 months, total revenue came in at $543 million. We talked about what they're going to do in Q4. We'll give them credit for the top end of that guidance at about $265 million. That means this company is going to have about 800 million. Yeah, 800 million with an M in terms of revenue over the last 12 months. So I'll let you do the math on that valuation, okay? Just on a price to sales basis, you're well north of 25 times on this one. Again, you can bring up a SoFi, you can bring up other loan originators. Well, it could be that that's what they trade at, or they trade north of that, or companies with this type of growth rate trade at that multiple. Those are things you want to figure out as an investor as well. Now, the other thing that I absolutely love to look at are the operating expenses, okay? Revenue is one thing, but if we ain't making any money, I don't necessarily am interested in a stock, at least for the longer term at the current time. But this company is actually doing a nice job. Look, we've got absolutely explosive revenue growth. I would absolutely expect sales and marketing to skyrocket, and it did. And in fact, if it went down, I probably would have already went out and bought stock, because if you can grow your revenue like this without spending any on sales and marketing, you're absolutely got a home run product. They have to spend a lot, probably on Google ads, Facebook ads, Instagram ads, all the kind of online ads out there where you're going to acquire customers. They probably do all kinds of deal swaps and other lead generation with all types of websites out there. And yeah, you're going to spend a ton of money on that. Customer operations went up tremendously, basically threefold. Engineering and product development. Look, when you're originating a bunch of loans with fully automated processes, yeah, you're going to have to invest a ton in product development and engineering. That went up nearly almost fourfold. And we got general and administrative also tripled, more than tripled, from 10 million up to 34 million. So our total operating expenses basically increased fourfold, okay? Went from 53 million up to 200 million. I don't really mind that. Take a look at this. So we take our revenue up here, 228 million. We minus off about this 200 million, and we get income from operations. Okay. At $28 million, okay? We were sitting at about 12 million in the previous period. Here's the other thing. It's a little bit of a shortcut, what I like to do. So I take the most recent quarter. We'll just round this up for easy rounding. We'll call this about $30 million. So I come over here to the 9 months, and I see for the last 3 quarters, they've printed $80 million worth of income from operations. If we times this number by 3, we get to about $90 million. So that is $10 million over where we are from the income from operations. Now, I did round this number up, but what it's showing me without having to go look, this company is growing their operating income quarter over quarter over quarter. And this was a fantastic quarter from an income from operations perspective. And if this company can continue to move that in the right direction, well, things are looking pretty good. Now, what I often do with new companies too is I come all the way down to net income just to see if these numbers really differ. Okay, the fact that 28.6 million is very close to 29 million, you can look at either one of these numbers. They're basically the same from a rounding perspective. Same thing for the 9 months as well. Okay, we printed 80.4 million on that revenue side after we maybe paid some taxes or maybe had some interest expense. It looks like we net incomed about 76.5 million. These numbers are also close enough from a rounding perspective that you can factor in either one in terms of your valuation. If these numbers were really different, like and occasionally you see this in companies, depending on their income tax situation, maybe some other expenses that happened in the quarter, well, these numbers could be way off. I tend to focus on operating income, or in this case, they label it income from operations. Now, we also want to come down to cash flows, but anytime you're looking at a financial company, I just did a video on Coinbase even, well, these numbers, I don't necessarily think you can analyze these companies from cash flows. Okay, there's all these add backs that you get to add back in. For one, we got stock-based compensation, went from 7 million up to $50 million worth of stock-based compensation in the last 9 months when you netted out 76 million. So yeah, they're generously rewarding their executives and employees. And look, that's very typical. The stock hasn't been around and been trading for that long. So we'd actually expect that stock-based compensation to be there and be hefty as it is. But we're going to ignore cash flows from operations. We're going to come down here and we're going to see what type of fundraising they do. It's usually the third column, or the third section, actually is probably a better way to say it, in cash flows. This happened to be on a couple different pages. Usually this is all in one page. And you see down at the bottom of cash flows, this cash flows from financing activities. This is where you learn how much dilution is happening at the company. You have proceeds from the secondary offering. This is basically you go public and then you have a secondary offering. They got 263. Again, something that is dilutive to you as the shareholder, but very common, extraordinarily common. In fact, it's so common that I would expect it for early stage IPO companies. Also, remember that year to date, the stock's up 721%. So no one cares literally about the dilution. Okay. Proceeds from issuance of convertible debt, another $600 million. I'm going to zoom back up to the balance sheet. We see that this company has $1 billion. This is the end of the year on the left-hand column. The right-hand column is the most recent quarter, or basically where we're at today. We got over $1 billion in cash. You come down here to total liabilities. They've got some borrowings here, but boy, this company is very, very well capitalized, as you'd expect with kind of a quote upstart or a recently IPO'd stock. Very well positioned on the balance sheet. I like that they're growing profitably. I like that the fact that they added on money in terms of this offering. They raised over very close to $1 billion over the last 9 months, and the market literally didn't care. That's a good sign as well. I think the only thing that probably seems a little out of whack is we've got a massive $25 billion valuation on this one. And on top of that, this stock is giving it back tremendously today. Okay, we're talking about over 25%. So a quarter of the value just got aerated out of this company. Now, when I'm trying to build a long-term portfolio and I'm trying to beat the market every year, I showed you my portfolio. I'm beating the markets every single year. Well, stocks that go down 25% absolutely obliterate your ability to have good performance, especially if you were overweight, which I certainly wouldn't recommend you doing in a stock like this. But look, the stock from a technical level has absolutely taken a dump, okay? We were on a monster rally. This is like a Google-like rally, although maybe not quite that good, but we were in a monster up channel on this one. And so we talk about this, especially when we talk about Google every Friday here on the channel. We recap all the FANG stocks, and a stock like this was in an upward channel. Well, when it broke, that was sign that something was wrong, and technically at the very best, we tend to go sideways or kind of back test up into this and then get rejected. In this case, earnings came and that would have me kind of nervous. Well, we had a lot of profit taking on this one, okay? And from a technical perspective, this one has completely broken down. Now, what unfortunately happens when you have these big up channels is, especially on a recent IPO stock where you literally don't have any price action down here. And so this stock, it's like, cutting through a, really high altitude air, okay? You don't have any turbulence. When you have have this type of move on a stock that's never been at that price level before, well, when it reverses, it should make you nervous. And I don't necessarily, the first sign of this drop is a buy the dip opportunity, because we are like a hot knife cutting through butter right here, and it could cut through literally all of these candles very quickly. Now, I have 2 levels marked out down here. These are the only areas I would think that you could absolutely stone cold think that demand is going to come in on these shares, because that is where we sideways consolidated for several months on this stock. And there's actually a third level probably at the bottom. Okay, I think intermediate 120 to 160. I know that makes you cringe if you bought this stock anywhere higher than that. Okay, especially the fact that we're up at 250. You're probably thinking this guy is crazy, thinking that 120 to 160 is the first area of support. But that's what this chart is telling you. I'm not telling you because I don't like Upstart and my loan didn't get approved. Okay, maybe I'll go and try to get a loan from them at some point. Now, lower than that, obviously down here at about $84 per share. And look, this stock was up over $400 literally last month. And I bet if you told investors, well, in 2 weeks, this stock's going to be a bit down at 250, people would have thought you were absolutely insane. So it's not crazy to think that we could carve another $100 off this stock. But I tell you what, I don't necessarily think that's necessarily highly probable. I think it is absolutely probable, and I've seen that formation numerous times, especially when you're looking at early stage companies. Now, what you want to look for if you're going to buy the dip on this one is a sign of some kind of reversal, okay? And we can kind of see it back in these areas where probably right here is where Upstart made a reversal pattern. Once it got above the previous highs, so we made a high, a lower high, and then a lower high, but then once we broke above it, it was a sign. Look, the stock never traded below $120 per share. The stock's resistance level was 120. It was support here. And so when we broke 120, that was a sign that the stock is broken down. It broke down here to $84. But once we broke above this level, the previous highs and the previous area of support, look at this. The stock, yes, a couple times here briefly below 120, but for the most part, the vast majority of these candles are over $120 per share. We're looking for a similar formation before we step in on this one. So I don't care what your emotional attachment is to Upstart, even if you've bought in at a lower price, even if you've bought in at a higher price, okay? I wait for some kind of reversal. It will look something like this, where you have candles bottom out at a price, and then you make a higher low and a higher low. And don't be trying to pick the bottom candle, okay? You would have had tremendous performance over here if you would have waited for the confirmation at 120, and then you bought, and maybe you accumulated the shares at 120 for several months. Well, you would have went from 120 up to 400 in less than a year, okay? That's fantastic performance, and you didn't have to get this one at the dead low. So don't try to buy the dip on this one. The very first sign of it, wait till we get confirmation and we start creating higher lows. Even then, it's no guarantee that the stock has bottomed, but it's a far more effective strategy than just buying this when it falls off a cliff 25% in one day. And the fact that we're off the highs of $400 per share, we're all the way down here to $250. Keep in mind, there's lots of smart money that's absolutely smoking short this stock, over 8%, and those guys are doing a party dance over to the Hamptons and Malibu and Bel Air right as we speak, because they just made a fortune in the after hours on this short position. They probably will just leave that baby on and keep riding it down because they've already bagged a massive winner on that, okay? Also factor in, we've got a $25 billion market cap on this one, not a ton of volume on this one. So this is a very speculative stock. It doesn't fit into my mold of trying to find buy and hold long-term, gonna beat the market stocks, but If you like speculative stocks that are highly, highly volatile, maybe you like this from an options play, although with this type of volume, I probably wouldn't necessarily get into that, but you might like it from a swing trade perspective as well. There can be ways to make lots. I mean, we're talking about lots of money, I think, in the shorter term on this stock. In the longer term, I'd wait for these financials, I'd wait for this market cap and this valuation to start making a little bit more sense. Then you might have the recipe for a fantastic long-term IRA type investment. That was Upstart Holding. Hopefully you guys enjoyed this video. Be back again soon with more. Good luck with your investments.